If you're still manually drawing balances and structure, you're wasting time and leaving clean profits behind. The key is seeing market structure and imbalance logic instantly on every chart. Let me prove it right now. Quick note before we dive in, this exact 4-second imbalance fix logic can be instantly automated. Stick with me and I'll show you the tool that does it in the next few seconds. And instant fix only works because it perfectly maps market structure and imbalance logic. We're breaking down that logic now. But wait, before we break it down manually, you need to know this logic is instantly automated. The Structure Companion tool is the ultimate fix, identifying all the highs, lows, and imbalances across all time frames. You are getting the tool, the short training course, and the exclusive Discord support to make sure you use it perfectly. You're gaining a guaranteed system for structure analysis, not just software. This is your next step to trading with confidence and precision. Now listen close. That instant proof you just saw, the Structure Companion tool is the reason. It takes everything you're about to learn manually and does it instantly across all time frames. If you know you need this guaranteed instant fix, the link is right below this video. Otherwise, let's look at how it works. Let's now take a look at the actual imbalance, how it actually forms and how you actually mark up the imbalance. Then we'll look at it with market structure, and then later you'll see how you can automate your imbalances with the dynamic imbalances inside the companion tool. And the first thing you need to understand is we have to have a 3-candle setup. So we have candle number 1, which is the start of a potential imbalance zone being created. We have candle number 2, which is going to basically be the actual leftover imbalance, the liquidity gap left over, where you're going to look for your setup to come back into those areas of imbalances. And candle number 3 is going to be the actual candle which forms the valid imbalance. I'm going to show you when it would not be valid and how it is valid here right now. So first, let's look at when it's not going to be a valid imbalance. Let's move this wick to the upside. So an imbalance is always going to be the leftover candle here, and I'll mark off with a level. When we look for imbalance, this is the current high of a potential imbalance. But if we see the candle number 3 wick up in a bearish market, this is, and we see a test of this previous lower wick on candle number 1 and then a continuation down, there is no valid imbalance here. There's nothing there then to use in the future market. So when we actually look for an imbalance, you need to see that smaller wick on candle number 3, leaving a gap between the lower wick number 1 and above of candle wick number 3. This leaves that leftover area of imbalance. Now, to make this visually easier for you to see, let's actually add on an imbalance zone. So we're going to add on an imbalance zone here. Now, when it comes to an imbalance itself, we have 3 levels of the imbalance we're going to look at. First, we're going to have, let me grab an arrow, we're going to have our first area of imbalance, which is the low of the imbalance. Now, when we see this, price could often just wick into that area like this. We can push into the imbalance and then continue to run to the downside. That is often where you're going to see just a wick into that lower end of the imbalance. We then have the 50% area of the imbalance. So let me just mark that off. The 50% area is the area that most of the time you're going to find the best setup. Now the 50%, again, you just want to see a wick through, price holding. You don't really want to see price closing through the 50%. You want to see it holding at that 50%. And then you can see we have a sweep of that high and a nice run to downside. Very often, this is your best area on an imbalance for an entry. And finally, you're going to have the high of your imbalance. And again, here, you do not want to see price closing through the imbalance high. You want to see just a wick through like this. That is absolutely fine. It shows you a full fill of that imbalance, and it's been fully used, liquidity left over in that imbalance with a continuation. That is the theory behind the imbalance, how you're going to look to find it, mark it on your chart. Just remember, you're looking at candle number 1 is the start of the setup. Candle number 2 will be the actual imbalance zone. Candle number 3 is where we have a valid imbalance or not. So how do we actually now use this with structure? How do we apply this across structure and imbalances to find potential trade setups? If you just take a screenshot of this so you can remember how the imbalance looks and how you're going to use it. So now what we're going to do is we're going to mark out from this area, potentially to current price is structure first. Then we're going to look at how we find those imbalances. So let's go from the high of this move. We'll mark off from this point at the high. So you can see here that we just have a potential sweep. Let me just put on the magnetic tool. So my last break of structure, let's just say from this point, this is where we see our last break of structure. So we'll add in a VOS. This is our last break of structure. Forget about price to the left after that. When we see this, as soon as we see a breakthrough to the upside on this candle, to find a valid low in the market, we look back from that breakout point and we're going to look for where we see a last close down. And I'll show you this with an arrow. This candle is the last time we see it close down below previous candle's low. And it's very important it's closed below the previous candle's low. When we see this and we see the push to the upside, we mark off the lowest point. That's going to be where we have our potential shift in market. Now, as this is, actually, I'll show you in a moment what this is a change of character, and this will help you to understand what the change of character is. From this high is then also we go for a valid high using the same approach. This candle is the one that closes below the previous candle's low. We look back to the highest point. This is the highest point, and it becomes our valid high in the market. Now you can see we actually run up, we sweep that high. This very often shows you a full reversal and the market runs down towards this level. Now this level becomes a dashed line for me, and it also becomes, and I'll mark it out, is a change of character. So this is where the market makes a first shift from a bullish market to a bearish market. Now, after this point, we'll start to look at mapping up our imbalances with price. But once we identify this candle closing through, we're going to mark out the last candle. We find the arrow that closes bullish. Now, we don't have that, I don't believe, until this candle here. This candle, any of these candles, they do not close above the previous candle's high. This is the first time we see that. That means we map out our high from this point in the market. We'll mark that out as a solid line. Let's move this one back. We'll leave these levels on there for you to see exactly where price is moving. Now, as soon as we identify this close down, we can start to look for and map out our imbalances. But we also want to find our valid low. Now, the valid low does not come in until this candle closes up. When we see that, we can mark out this is a valid low in the market. And that does create a new break of structure to the downside. Continuation there. And before we continue from this point, let's look from this point where we see a break to downside. Can we identify those imbalances? So the imbalance, remember, we're looking for candle number one. Well, to start with, this is our candle number one, this smaller candle here. Candle number two is the big bearish candle to downside, and candle number three is where we see this candle. So that leaves a leftover area of imbalance between the low of that candle and the high of that candle. Okay, so we've got, this is our leftover imbalance. That's our first imbalance. So we can see the market pushes up. It doesn't get to the 50%, so we hold at the lower end of the imbalance. Remember I said we can look to hold at the lower end, the 50%, and the higher of those imbalances. So we've held at the lower end, and the markets continue to push to break structure. Now, just like we see here, we get candle number one, candle number two, and candle number three. Now we can map out our next imbalance level, our zone. Let me just take off this magnetic tool, that's better, and we can identify what happens next. So from this point in the chart, we have this previous tested imbalance. Now that is a leftover mitigated imbalance. It's not fully mitigated, and we can leave that on the chart, but we refine it to the previous high. We then have the next imbalance. You can see when price does come up into that imbalance, look at how we hold at the high end of the imbalance. I was saying, remember at the beginning, we look for the low, the 50%, or the high of the current bearish imbalance. And that's exactly what shows here in the market. Now, from this point now, we can see and identify where we have a new change of character. So when we see this break and close to downside, there is our last close up candle is going to be this candle here. So that means I can now map out from this high is a change of character level. So I'll mark that out as a dashed line. We'll just put on there change of character so you can see this. So we've gone from a bullish market to a bearish market, continuation bearish, and we've gone back bullish. But at this point in time, we do have the leftover imbalance above price, this area. Now this means that when the market gets into this area, when we do eventually hold and we push back down, we could run back towards the previous low or an area of demand. depending on your higher time frames. But we'll go with this current time frame of the daily here and continue to walk through. As soon as we identify our close down on this candle, that means we can map out the previous high. This becomes our level of a structure high. Again, I'm just going to put on my magnetic tool, make sure that's in the right place. Once we have the break to the upside on that candle, we can look back for the last close down, and that was this candle here. That means we can map out the low as our current structure low. So our current structure is bullish, but we have an imbalance in the way. So this area of liquidity could push price lower. And if we zoom into this area now, and we'll go through step by step, when we see this, we have candle number 1, candle number 2, and candle number 3. That means I can actually map out a leftover imbalance right here in the market. So let me just take off that magnetic tool again. So again, we can see that the market bounces into that area of imbalance. Then we move sideways and eventually we actually close through on this candle. Now we do have a very small leftover imbalance here as well. So we'd have candle number 1, candle number 2, and candle number 3, the bearish candle. So we have a very small leftover imbalance there. You can see price fully fills that imbalance, and then we close through to downside, which means we're going to run towards the next imbalance. So you can see how price actually moves from imbalance to imbalance. At this point in time, we do have a bullish bias on this daily time frame, but you also understand that we have that area of imbalance above price. So we can move this level across. We actually come all the way down and we sweep into that area. So once we actually see price closing through our imbalance here, we've got a high chance of a target to run for this low in the market. Now that's because we have no more imbalances below price. Now again, just like we see on the move to downside, this is our bullish move. We don't draw any imbalances here until we see price breaking structure. We'll continue forward so you can see how the market structure works here. So when the market comes down, we sweep that low only. What do we get? We get a close through here, and that does become a new change of character once again. So the market has gone from a bullish back to a bearish bias. As soon as we see and identify this candle closing through, we're going to look for that last close up. That's that candle right there. From the high of that candle will become your valid structure high. And again, let's just magnetize this again so we can make sure this is in the right place. So now we have a valid structure high again. And then we look for the next close up, and that's on this candle. See how easy it is to map your structure? Once we have that in place, we can mark out the structure low. Okay, and you can see that we have a new break of structure to the downside. So we continue bearish here after that change of character was made. So again, once we identify this close through and we valid high has been marked and mapped out, we can start marking out previous imbalances. Now we did have an old imbalance here. See, the market has come into, it held, and then we continue to run down. And then we broke structure from that imbalance. We also have an imbalance above price as well here. Previous imbalance, price held it and continued to push lower. So when we get to this point and we see a new break of structure, we can start looking for the last close up, which is here. That gives us our valid high in the market for our next potential reversal. That's going to be your change of character again, back to the upside. And let's just change that to a dashed line. So we've gone bearish, now back to the upside, creating a bullish bias. So this is very easy to understand. And once you identify the close up here in the market, this will create that valid low. So we can map out the valid low here and we'll put that back to a solid line. Again, when we see this, we can actually look at candle number 1, 2, 3. That leaves an area of imbalance here. Let me just turn off that magnetic tool. And eventually you can see that we closed through that imbalance. And we even had one below that as well, a previous imbalance. So you can see that we come into that imbalance, we held, we then pushed through, and we continued through, and then we took the high for change of character. When we do see price breaking to the upside here, and we get that validation, we get a new close down. We get closed down here. Actually, no, we don't have a close down, so we still got a valid high to the upside. We never got a close down there at all. So we've got a current move is still bullish on this daily time frame. But we got that shift bullish. We can see this to the upside here on this pound Swiss franc pair. And it signals to us that we now understand that after we create this bullish close up, we can look back for any imbalances. Well, we know these ones had been removed and closed through. Do we see any imbalance? Well, we do have one left over right here. Now this one would have been candle number 1, candle number 2, candle number 3, but look how this wick comes all the way down. There's no leftover imbalance. Now the reason this happens is because this long lower wick fully fills this candle's body, and then we start to push to the upside. Now again, we continue to push higher. We've now got again candle number 1, okay, candle number 2, the big bullish move up, candle number 3. This gives you your area of imbalance left over. Okay, so now we have a potential imbalance below price. We also have this as a previous high. Let's mark it off, where price is heading towards. And above that, we have this leftover imbalance, where price is likely to run towards. So this high, not a key level compared to our imbalance. So when we start mapping out the imbalances, it helps you to identify where we have leftover areas. So again, we have a leftover imbalance above price here. And even above that, we have another imbalance we can map out here. So you can see that from this point, we understand that our structure has now gone back to the upside. We're now bullish again. We have a previous imbalance below price, but we have imbalances above where price can start to run to. Once you understand how the imbalance is mapped and how to use it in your trading, it's going to help you start understanding why the market bounces from these areas as they do. These are important levels left over where the market is going to gravitate towards to fill that area of liquidity left over in those liquidity gaps. Now, what if you could actually automate this and create these dynamic imbalances as well for you to show you the mitigated zones, leftover imbalances, and those fresh zones left over. So like this one is a fresh zone, this is still a fresh zone, but these ones above are all going to be mitigated zones. How can we do this? Well, the companion tool will automate this fully for you for a click of a button. Now what I'm going to do, I'm going to leave all this on for you at the moment, but then we'll go over now and I'll just quickly turn on the tool and you'll see how those actual zones appear. So we've even got one there that we missed just now, and then the companion tool has marked this out. You can see how we have the fresh zones below price, and we have these zones above price, which are mitigated zones, but where price is likely to gravitate towards. That is how the actual companion tool is going to automate these dynamic imbalances for you and help you to understand where they are on the chart and to see these reversal points within these zones. So that's the structure companion tool. Your complete structure mapped automatically, validated across multiple time frames in seconds. Remember, when you get access, you are securing lifetime access to the indicator, the short training course, and the exclusive Discord support. This isn't just a fix, it's a complete system for confident structure analysis. Don't waste another day manually drawing structure. The link to claim your full access is right below this video. If you want to go deeper into mastering this topic and building real consistency, watch this next video on market structure that uses the same process and system inside the 90-day profit training system.